Welcome to the El Salvador SV News Podcast, a space for conversation and reflection where we explore current topics from El Salvador and the world together. You can support this project via PayPal. You'll also find details in the description of this content, or by purchasing digital content of products you might like. Check out what interests you and make a purchase. With that, you help and support us to continue providing content. You'll find all the methods in the content description. Find us on your favorite platform, on Spotify, Amazon Music, Apple Podcasts, TuneIn Radio. We're on almost all platforms as Noticias El Salvador SV.
Welcome back to the Deep Dive. It's Friday, January 23rd, 2026, and I have to be honest with you. Looking at the stack of reports on my desk this morning, I'm getting a little bit of vertigo. It feels like the entire geopolitical map is being shaken like an etch check.
Vertigo is definitely the right word. From a financial perspective, we're looking at a day of just extreme cognitive dissonance. If you look at the charts this morning, the markets are screaming. We're seeing gold nearing a historic $5,000 an ounce. That's a psychological barrier that usually signals panic.
Right, that's the fear index going through the roof. But at the exact same moment, we have diplomats sitting down in Abu Dhabi to discuss an $800 billion financial package that's a big might in the war in Ukraine. So you have the potential for peace, yet the markets are buying bunkers.
It's a collision of force and finance. And that's really the mission for this deep dive, isn't it? We need to unpack how this aggressive new foreign policy is shaking up global commodities, figure out why the crypto markets are, decoupling from gold today, and really understand the transactional nature of this new world order. Because what we're witnessing is the pricing of sovereignty itself.
That is the thread I want to pull on, this idea that everything, even a border, has a price tag now. Let's start with that story that feels like it's straight out of a political thriller. The United States of America, NATO, and Denmark. We're hearing reports of a tentative agreement regarding Greenland.
This is a massive development. The reports indicate a deal where the United States of America gains rights to extract minerals in Greenland and, crucially,
deploy missiles.
Deploy missiles on the island. Exactly. Strategically, this is all about securing the Arctic and those rare earth supply chains.
But here's where it gets so incredibly transactional. The report suggests this is a direct quid pro quo. In exchange for this access, there's a promise from the United States of America not to impose tariffs on European allies.
Yeah.
It's essentially saying, give us strategic access to this island and we won't hit you with a trade war.
Which is just a profound shift in how alliances work.
Yeah.
Historically, security cooperation within NATO was based on shared defense values.
Yeah.
We protect you because you're an ally.
Right.
Conversely, this arrangement is explicitly commercial. It treats a military alliance almost like a subscription service where the fees are negotiable.
And it seems not everyone is happy about those subscription terms. Greenlandic officials are reportedly furious. They're claiming that NATO Secretary General Mark Rutte had, and I'm quoting here, no mandate to negotiate this on their behalf. It just highlights that tension between national sovereignty and these massive alliance politics.
It introduces significant friction. Nevertheless, from a market perspective, it signals that the United States of America is prioritizing resource security over, diplomatic niceties. And speaking of redefining alliances, we have to look south. There's a really controversial proposal on the table regarding the border between the United States of America and Mexico.
This one really jumped out at me. The proposal is to invoke NATO's Article 5 to deploy alliance troops to the southern border to fight illegal immigration. The logic being presented is that this would free up Border Patrol agents for other tasks.
Okay, let's just pause on the implications of that for a second.
Yeah.
Article 5 is the collective defense clause. It basically says an armed attack against one is an attack against all.
Right.
It was designed for, tank invasions. Invoking it for immigration enforcement is a radical redefinition of what constitutes a threat to the alliance.
So instead of defending against a foreign army, you're using international troops for domestic border control.
Precisely. And this creates what we call an uncertainty premium in the markets. Because if a military alliance designed for collective defense is suddenly repurposed for domestic enforcement, it changes the risk profile for every country involved.
Yeah.
Does a French or a German soldier sign up to patrol the Rio Grande? It strains international relations, and it creates a volatile environment for cross-border trade.
It just feels like the definition of security is expanding so rapidly. And just to add one more layer of tension before we move on, we can't ignore the Middle East. There are reports of a huge fleet being deployed to Iran just in case, with warnings of potential military action.
So you have aggressive posturing in the Arctic, the southern border, and the Persian Gulf. all at the same time. Markets hate conflict, but you know what? They love clarity. And right now we have the threat of conflict without any clarity on the endgame. However, while all these sticks are being waved, there's a massive carrot being dangled in Abu Dhabi.
This is the biggest transaction of them all. The Abu Dhabi talks kicking off today. Trilateral negotiations between the United States of America, Russia, and Ukraine. And just look at the cast of characters. Steve Witkoff and Jared Kushner are there.
The presence of those figures is very telling. It suggests this is being treated much more like a real estate transaction or a corporate merger than, say, a traditional diplomatic summit.
So let's look at the deal on the table. The documents being discussed reportedly propose a land for money arrangement, specifically a full withdrawal of the Ukrainian army from the Donbas region.
And here's that financial price tag we teased earlier. An estimated $800 billion financial support program.
$800 billion. That is just a staggering amount of money.
It is. And if we connect this to the bigger picture, we are seeing a precedent where sovereign territory is assigned a specific dollar value. Now, from an economic standpoint, ending the conflict would remove a massive source of global instability, which is generally bullish for markets, notwithstanding the potential peace. The terms, essentially buying peace by redrawing borders, introduce a whole new kind of geopolitical risk.
It really begs the question, if borders are now tradable for financial packages, what does that say about the stability of smaller nations globally? It turns sovereignty into a line item on a balance sheet.
Exactly. And this force and finance strategy is being applied elsewhere too. Let's look at the Caribbean. Following the implied capture of Nicolas Maduro in Venezuela, the focus has shifted sharply to Cuba.
The strategy here seems less about a buyout and more about a squeeze. The report suggests a goal of forcing regime change in Cuba by the end of 2026.
The mechanism is economic strangulation, pure and simple. They're cutting off subsidized Venezuelan oil, which is a lifeline for the island and could run out in weeks. Furthermore, there's a push to ban visas for medical missions.
Which is a huge source of revenue for them exporting their doctors.
Precisely. But as a financial analyst, I have to look at downside risks here. The assumption is that economic collapse leads to a clean political transition.
But historically, that's rarely the case, is it?
It's rarely the case. The risk here is a catastrophic humanitarian crisis and a total economic collapse, not some neat change of government. Unlike in Venezuela, there's a lack of organized internal opposition figures in Cuba. So we're looking at potential chaos right on the doorstep of the United States of America.
So we have tariffs being swapped for missiles, fleets deploying, land being traded for billions, and regime change strategies in the Caribbean. It's no wonder investors are looking for a place to hide. You mentioned gold earlier. Let's dive into those numbers.
The numbers are historic. Gold is trading near $5,000 per ounce. Silver is pushing near $100 per ounce. These aren't just incremental gains, this is capital flight. Investors are rushing to the exits for the dollar and for treasury bonds.
So people are dumping the dollar.
They're diversifying away from it, and rapidly. The primary driver is, quote, uncertainty in the politics of the United States of America. But there's a specific catalyst that is really spooking the institutional money.
What's that?
It's the fight for the Federal Reserve.
Right, the investigation into Chairman Jerome Powell. The Department of Justice is launching an investigation regarding office renovations. Is that right?
That is the stated reason, yes. But Powell himself has called it a pretext to remove him.
Okay, let's play devil's advocate. Why does an investigation into office renovations send gold to $5,000? Why does the market care about the wallpaper in the Fed chairman's office?
Because the market doesn't care about the renovation. The market cares about the independence of the central bank. That's the key. The Federal Reserve's credibility rests on the idea that it is independent of the White House.
Okay.
If investors believe that the Fed is coming under direct political influence, they fear that monetary policy interest rates, money printing, will be used for short-term political gain.
Meaning a politician might just say print more money to boost the economy before an election, regardless of inflation.
Exactly that. And that devalues the currency. When you can't trust the currency issuer to be independent, you buy the asset that no government can print, no politician can fire, and no DOJ can investigate. You buy gold.
That makes perfect sense. It's a trust issue. Now, usually when we talk about hard assets or alternatives to the dollar, we talk about Bitcoin. But looking at the crypto markets today, Bitcoin isn't really riding this wave, is it?
No. And that is the divergence everyone is curious about. Bitcoin has fallen to approximately $89,500. It's down about 5 to 7% on the week. It's significantly lagging behind gold as a safe haven right now.
Even though we saw Strategy Inc. buy another $2.1 billion in Bitcoin, usually that kind of massive institutional buy moves the needle upward.
It does. But today, there are technical factors weighing it down. This is where we need to get into the plumbing of the market. Today is a massive options expiry. We have $2.3 billion in Bitcoin and Ethereum options expiring.
Okay, so let's unpack this for the listener who doesn't trade derivatives. Why does an options expiry push the price down?
Think of it like a casino. The house, in this case, the market makers and dealers who sold these options, they lose money if the price goes too high or too low. They have a specific price point where the majority of those options expire worthless, allowing the house to keep all the premiums. We call this max pain.
So they're actually incentivized to pin the price to that number.
Exactly. For Bitcoin, the max pain level is $92,000. For Ethereum, it's $3,200. And since the current price is below that $92,000 level for Bitcoin, dealers are forced to hedge their positions, which often involves selling into rallies to keep the volatility manageable.
So it's almost like gravity pulling the price toward that pain point.
Or keeping it suppressed below it. Yeah, it creates a technical ceiling. So while gold is moving on macro fear, the big geopolitical stuff, Bitcoin is currently stuck in a technical squeeze caused by market mechanics. It's a short-term phenomenon versus a long-term trend.
That explains the slump. Speaking of crypto, there's an interesting narrative popping up in the sources about Zcash. I haven't heard that name in a while, but suddenly people are comparing it to Bitcoin.
It's the scarcity argument resurfacing. Some investors are looking at Bitcoin near 90,000 and, feeling they missed the boat. The argument emerging is that Zcash shares Bitcoin's identical scarcity. Only 21 million coins will ever exist, but it represents a value play at a much, much lower price point.
So it's bargain hunting.
Essentially, it's capital hunting for the next Bitcoin when the original feels too expensive. Plus, Zcash offers privacy features that Bitcoin lacks, which, given the geopolitical surveillance we were just talking about, is becoming a selling point again.
Interesting. So while the big geopolitical moves are happening, the crypto market is looking for value plays and fighting technical resistance. I want to shift gears and zoom in on a specific region that represents this whole modernization struggle really well, El Salvador. We have some conflicting data coming out of there.
It is a very mixed picture, a real dichotomy of progress and pain. On the macro side, you have the Inter-American Development Bank forecasting a 4.6% growth in exports for El Salvador in 2026.
That's a solid number.
It is. It suggests the economic engine is working.
But then you look at the social side, we have reports of a resurgence of the La Raza gang. Authorities have captured 63 students and ex-students linked to this structure just since June 2025. It sounds like a battle for the schools.
It is, and security is a prerequisite for long-term economic stability. But there's another statistic that stood out to me from the reports, and it connects directly back to the economy. Over 14,700 people received hospital care for traffic accidents.
That seems like such a random statistic to include in an economic report. Why does that matter?
Because nearly 79% of those people were employers, farmers, or merchants. That is the core of your workforce. When you have nearly 15,000 of your most productive citizens in the hospital due to road safety issues, that is a massive hit to economic productivity. It drags down that 4.6% growth we just talked about.
That is a fascinating connection. It's a reminder that economics isn't just about trade deals. It's about public safety and health infrastructure, too. Also in El Salvador, there's talk of a new blue economy authority to replace the old fishing regulator. It seems everyone is trying to modernize their institutions.
Modernization is the key word. And that brings us to the future tech horizon. We have confirmation on the timeline for the digital euro.
Yes, the report says it's heading to the European Parliament in June 2026.
This is significant. We just talked about the independence of the Federal Reserve. The digital euro is the European Central Bank's answer to the digitization of money. It's a central bank digital currency. It moves money from being a physical bearer asset to a programmable digital ledger controlled directly by the central bank.
And while Europe digitizes money, Elon Musk is promising to digitize labor. He made an announcement that humanoid robots will be on sale to the public by the end of next year.
By the end of next year, we always have to factor in Elon time, but the intent is clear. If we connect this to the bigger picture robots for labor, digital currencies for trade, AI driving stock markets, We are rapidly moving away from the traditional human-centric economy.
It really feels like 2026 is the year where all these sci-fi concepts are actually hitting the pavement, or the parliament in Europe's case.
Precisely. And it all circles back to control. Who controls the currency? Who controls the labor force? Who controls the borders?
So bringing it all back home, we started with gold at $5,000, an $800 billion peace deal, and missiles in Greenland. What's the main takeaway for the listener driving to work right now?
The takeaway is transactionalism. We have entered an era where governments are using economic levers, tariffs, oil cuts, financial packages as direct weapons of war. The old diplomatic niceties are, well, they're gone.
It feels like the ground rules have changed.
They have. And the markets know it. That's why they're fleeing to tangible assets like gold. They want something real in a world where the rules are being rewritten on the fly.
I'll leave you with this thought. If sovereignty can be bought for $800 billion in Ukraine and traded for tariff exemptions in Greenland, have we entered an era where national borders are just another line item on a balance sheet?
That is the multi-trillion-dollar question. And as the United States of America investigates its own central banker, asking if the traditional pillars of financial stability are crumbling is not just valid, it's necessary.
It is certainly a weekend to watch the charts.
Absolutely. Keep your eyes on gold and keep watching the news from Abu Dhabi.
It's going to be a pivotal couple of days. Thanks for joining us on The Deep Dive. We'll see you next time.